hucksters, fraudsters, scam artists, Ponzi schemes, the public being left in line at the bankruptcy courts. We've seen this story before.
The SEC has exposed Binance's internal chat logs, and Solana strikes back at the SEC. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop the latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Binance US has announced the suspension of USD deposits and has notified its customers of an incoming pause to fiat USD withdrawal channels as early as June 13th. On June 9th, Binance US announced that it was forced to take action amid extremely aggressive and intimidating tactics from the United States Securities and Exchange Commission. The firm noted that in an effort to protect its customers and the platform, it's suspending USD deposits. Furthermore, Binance US is notifying customers that our banking partners are prepared to pause fiat USD withdrawal channels as early as June 13th, 2023. The company added that it plans to transition to a crypto-only exchange, but maintains a 1-to-1 ratio for customers' assets. The notice also cautioned that any downtime in processing withdrawals going forward may be the result of elevated volumes and weekend bank closures. They confirmed that trading, staking, deposits, and withdrawals in crypto remain fully operational. As a result of the SEC's ideological campaign against the American digital asset industry, Binance US and its banking partners have faced increasing challenges, it said. Those banking partners have signaled their intent to sever fiat on-ramps to the exchange. US dollar deposits will be suspended as of June 9th, and USD trading pairs will be delisted next week. However, it will continue to support Tether trading pairs. It said that any USD left on the exchange might be converted into a stablecoin that can be withdrawn on-chain. Binance US delisted 8 Bitcoin pairs and 2 BUSD pairs on June 8th, while noting that OTC trading portal services were paused. The SEC issued an emergency order on June 6th to freeze the assets of Binance US. The following day, the firm reassured customers that their assets remain safe, adding that the platform continues to be fully operational with deposits and withdrawals functioning as normal. Binance CEO CZ has issued a warning to employees regarding their internal communications following the lawsuit from the US Securities and Exchange Commission on Monday. According to a translated copy of a memo he wrote to his employees, CZ said, "Everything you say could end up in court or on the internet one day." The executive's warnings follow the SEC's recent leak of a screenshotted chat log between employees, including the company's former compliance lead, Sam Lim, and head of business development, Alvin. During their conversation, the employees privately discussed dumping their BNB tokens before they tanked and admitted to operating an unlicensed securities exchange, much in line with the SEC's allegations are against Binance. In his letter to staff, CZ dismissed the chat logs as a complaint made by 2 people, but said the ordeal did a lot of damage to the company's reputation and warned that the SEC would likely ask for the exchange's chat history as part of its investigation. CZ clarified that he does not look at employee conversations and that this is his first time seeing those logs. He added, saying, "It's ridiculous for the SEC to use this as a poster, but we'll let the lawyers take care of it." CZ also on Thursday refuted claims that the crypto exchange diverted as much as $12 billion in user funds to other companies controlled by the CEO. The clarification comes after reports said that CZ diverted customer funds to a company called Merit Peak. Explaining the decline in user funds in the response to the SEC lawsuit, the Binance CEO said all user funds are accounted for and that they've never left in an unauthorized manner, saying, "To the best of my knowledge, Binance US had in total roughly $2 billion in user funds. All user funds are accounted for and have never left the Binance US platform, unless users withdraw themselves, of course." In a June 8th speech at the Piper Sandler Global Exchange and FinTech Conference, United States Securities and Exchange Commission Chair Gary Gensler compared the current crypto market to the 1920s US stock market, saying that it's full of hucksters, fraudsters, and Ponzi schemes.
Hucksters, fraudsters, scam artists, Ponzi schemes.
Just as Congress cleaned up the stock market by enacting securities laws, the current SEC can also clean up the crypto market by applying these laws, he argued. In the talk, Gensler praised the Securities Act of 1933 and the Securities Exchange Act of 1934, claiming that these laws allowed the U.S. securities markets to thrive over the next 88 years. He argued that the crypto securities markets of today should also benefit from these laws, as they're not less deserving of protections these laws provide. Pointing to a court ruling against Telegram Open Network, Gensler argued that crypto asset securities are not exempt from securities laws, even if they have utility. Gensler stated that some promoters of crypto asset securities contend that their token has a function beyond simply being an investment vehicle, as the courts in the Telegram case and others have said. However, some additional utility does not remove a crypto asset security from the definition of an investment contract. This means that crypto security exchanges must comply with securities laws, including the requirement to separate the exchange, broker-dealer, and clearing functions. In his view, this separation helps mitigate the conflicts that can arise from the commingling of such services. The SEC had argued that the current crypto market is rife with scams that have arisen because the industry's lack of compliance with securities laws, stating that with wide-ranging non-compliance, frankly, it's not surprising that we've seen many problems in these markets. We've seen this story before. It's reminiscent of what we had in the 1920s before the federal securities laws were put into place. As the chair of the SEC, Gary Gensler has been heavily criticized within the crypto industry, especially since the SEC filed lawsuits against crypto exchanges Binance and Coinbase. Critics say he has an overly expansive view of the SEC's regulatory authority and is driving innovation out of the US. The Solana Foundation is disputing the SEC's classification of its SOL token as an unregistered security. Earlier this week, the SEC filed lawsuits against crypto exchange Binance US and Coinbase, which charged the exchanges with trading crypto asset securities, including Solana. Solana said, the Solana Foundation strongly believes that SOL is not a security. SOL is the native token of the Solana blockchain, a robust, open-source, community-based software project that relies on decentralized user and developer engagement to expand and evolve. And at Solana's Thursday Hacker House event in New York City, it appeared that Solana's community wasn't overly concerned with the chain's regulatory nuances. A developer at the Hacker House on Thursday said, I don't think any of the developers give a shit. SOL being a security doesn't really affect anyone building on top of Solana. NFT platform Enjin has announced its transition to a new mainnet called Enjin blockchain, aiming to further Web3 adoption. Following the transition, its Polkadot parachain called Efinity has been forked to the new blockchain. The Enjin team highlighted that the Enjin blockchain would differ from other blockchain solutions that rely on smart contracts. According to Enjin, functions like creating and transferring NFTs will be integrated into the blockchain's foundational code. Apart from this, a blockchain also presents new features. These include fuel tanks, which lets developers subsidize user transaction fees, and discrete accounts, which allow users to interact with projects using its blockchain without downloading specific wallet software. The team also informed its community that Efinity, its Polkadot parachain, has also been forked to the new mainnet. It'll be called the Affinity Matrix Chain and support a transition for its existing users. Enjin co-founder and chief technology officer Wojtek Radomski said that the launch of the Enjin blockchain aims to support creativity by making it easier and economical for anyone to create and distribute NFTs. He explained the Enjin blockchain makes the creation and mass distribution of NFTs affordable and accessible to everyone. Circle brought its native USDC token to Arbitrum, Ethereum's leading Layer 2 scaling solution, making Arbitrum the 9th blockchain to extend support for USDC, according to Circle's official announcement. The newly enabled function allows businesses utilizing Circle to conveniently swap USDC across supported chains, avoiding the cost and lag times linked with bridging transactions. Following a recent bug in Arbitrum sequencer software, which caused a temporary halt to the on-chain transaction verification, Circle's USDC introduction on the Arbitrum network now allows developers, businesses, and users to access Arbitrum USDC and take advantage of the faster settlement times and lower costs offered by the Arbitrum network. Arbitrum is making major strides towards expanding its ecosystem, with the network onboarding Norway's digital currency. Symphony Solutions, a team facilitating digital interactions between government services, announced the launch of a bridge between Norway's central bank digital currency and Brock, an Arbitrum-based platform for tracking and managing shareholder data for unlisted companies. The Arbitrum-based NOC token is programmable, enabling anonymous transactions with stealth addresses, know your customer compliance, preferred maximum limits, and a continuous compounding interest. Arbitrum first revealed that Norway was using its technology for Brock in June 2022. Arbitrum is fighting to preserve its position as Ethereum's top Layer 2 network as it faces increasing competition from old and new rivals. Crypto exchange Kraken has officially launched its NFT marketplace out of beta testing, supporting over 250 NFTs across Ethereum, Solana, and Polygon blockchains. The company launched a public beta version of its NFT platform in November. Initially, it offered support for a curated selection of 70 NFT collections on Ethereum and Solana. As part of its public launch, the platform has pledged to include not only blue-chip projects like CryptoPunks and Bored Ape Yacht Club, but also more affordable collections that can be bought for under $100. Kraken's NFT marketplace says it will not charge gas fees to customers who buy and sell NFTs on the platform. However, it specifies that gas fees will be incurred when transferring NFTs and other crypto assets on and off the Kraken platform. Users have the choice to pay in fiat or cryptocurrency, and listings will have built-in rarity rankings. Kraken says MetaMask and Solana's Phantom Wallet are currently supported, and Wallet Connect will be added in the future. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.